just finished up an interview on NPR Marketplace, making some potentially market-moving comments, saying that a soft landing may depend on factors the Fed does not control, also saying that 2 50-basis-point hikes in the next 2 meetings would be appropriate. He's also talking about what a soft landing means. A soft landing means hitting 2% inflation with a strong labor market. Does this change the game? Dan Nathan.
I don't think it changes the game. I mean, I think it's funny that we're back to that 2% inflation target. That was that they were dying to get to on the upside. Now they're dying to get to it on the downside. I think Guy would tell you that inflation is going to be both pesky and persistent. Isn't that what he keeps saying there about inflation? So we might have low single digits up from that like kind of 8% readings that we've had. But I guess it's around here to stay. The idea of threading the needle for a soft landing, nobody really knows. And if you just look at a lot of the action, a lot of different risk markets here, it does feel like the markets are starting to price in a sort of growth scare, like a slowing growth sort of environment. And that's not particularly great. I do think, though, that if you're a trader, whether it be of stocks, of commodities, of currencies, of rates and stuff, it's a fun time. If you're an investor, it's really confusing right now.
Yeah. On first glance of these comments, you think, oh, my gosh, that sounds terrible. But then you realize that this is actually the Fed coming around to what the markets already think. The Fed is coming around to things that we've even been saying here on this show, Guy Adami, in terms of being able to control some of the factors pushing inflation higher, which they do not control, especially when it comes to supply chain and Russia-Ukraine.
You're trying to trigger me. That's what you're doing on this Thursday, aren't you? I mean, you're just trying to upset. It's a beautiful day. You're trying to get me upset. It's not going to, you're not. You're not going to succeed. I mean, if Chair Powell or any of his cronies watch CNBC's Fast Money each night at 5 p.m. Eastern time, for literally the last year, they could have gotten a lot of their cues from us, oddly enough. So I don't know if you're a fan of Johnny Nash. I think Tim, I'm sure, is. But he's saying, I can see clearly now. Apparently, that's what's going on with Jerome Powell. Now, I'll say this, and we're going to talk about the market. If the market doesn't react negatively, and I thought the price action today was excellent, that's actually a really good sign.
This doesn't mean necessarily that the markets won't have a negative reaction, even though he is simply saying what many people on the street were already thinking, Tim.
It also doesn't mean that the rain is gone, which I believe is the last line of the song that Guy started singing. The rain's not gone, and if you actually look at 3 hikes, we almost have essentially another 50 bips priced in for that third meeting out. And I don't think it really matters. We heard Meister this week, who took down the market a couple days ago, trying to leave all options on the table. I think the Fed has to be shocked, even though no one is terribly surprised that the momentum today, PPI, like, are we Argentina at 11.5%? It's crazy to think where we are, and we all know that the services inflation that was shown yesterday in CPI is about 5% is very sticky and probably moving higher. Where are the markets? Well, look at the bond market. Again, look at the flattening of the yield curve that we had over the last 3 to 6 months. But we've actually steepened a couple basis points. The bond market is telling me on a day like today, when we've actually seen the 10-year bond continue to come in, and that it actually had a bear steepening, which, folks, quickly just means that you had the short end start to, rally a bit, and you got steeper from the short end. So it was actually a bull steepening, and you have a case where the market is telling you they are worried about growth, and that ultimately the Fed may not be able to do what they're trying to tell us they're going to do.
Again, this is from an NPR interview, and we have part of the transcript of the interview, and this is sort of interesting, so I'll read you part of it here. He says, would just say we have a series of expectations about the economy. If things come in better than we expect, we're prepared to do less. If they come in worse than we expect, we're prepared to do more. The interviewer then says, let me be clear, 75 basis points is prepared to do more. Powell says what you've seen this committee adapt to the incoming data and evolving outlook. That sounds like 75 is, in fact, on the table, Karen.
Yeah, I think, well, just to follow the theme, I think he can see some obstacles in his way. I think that I don't think he intended to put himself in a box that way that we interpreted, having done so. And I don't think these comments mean, it was just like you're saying, everybody else sort of thinks this already, right? We're really upset with him if he's too dovish because he's, inflation's going to get out of control. And now we're supposed to get upset with him because he sounds a little more hawkish, that maybe, he can't successfully navigate a soft landing. I don't think he really knows exactly what's going to happen. I don't think any of us do. So I'm inclined to give him a break. And I think, does it really matter if they go 75 now or they go 50 and then 50 and maybe 50 again? I don't know that really matters. What I think matters more is what happens to commodity prices. And we're starting to see some of them crack. So that's going to be more helpful to him than... I think that's the most helpful thing for him. Inflation to come down. Today was such a hot print.
This interview is fascinating. I'll just go into a little bit more of it. If you had perfect hindsight, you go back, and it probably would have been better for us. This is Powell speaking. It probably would have been better for us to have raised rates a little sooner. Okay, let's move on. Talk about the markets today. Guy Adami, what did you make of the action? It was a very interesting session. We took a leg lower midday, then we managed actually to finish off the lows.
Yeah, I thought actually today, and Dan everybody can speak to this, but Dan actually bought things today, believe it or not. But I thought the price action was great. Now, just to, a little refresher course, I thought 37.50 in the S&P, got down to 38.58 today, which peaked the trough from the recent all-time high. Is 19.9%. That number's meaningful because that was the same move lower back in October into December of 2018. And I thought Apple could get to 138. 138.80 the low today at 24% peak to trough decline from its all-time high, which is pretty much run-of-the-mill what we've seen from Apple over the last 5 or 6 years. So price action today was really good. Again, I'm not going to be one of these people that's going to call bottom because it's just disingenuous to do so. But I think today sets us up for at least a 3 to 5% bounce in all these markets.
Yeah. Do you remember that Life cereal commercial with Mikey? And Mikey finally likes Life.
Of course, the Gilchrist brothers, by the way. They grew up in Yonkers.
Don't say bullets. It's incrementally less bearish.
Less bearish,
okay,
but that is still progress.
Well, here's the thing. We've been talking about, are we there yet? What are some of the signs that are going to be, right? And so we're starting to see inflation break-evens kind of peak on a one-year basis. Karen just talked about some of these commodities that are kind of rolling over here. There is a scenario where everything doesn't actually have to come apart. One of the things that I hate when it comes to markets, I hate manias, right? And we had a stock market mania. We have been talking about it for over a year now, maybe close to a year and a half, how each one of these has gone the way of the dodo, okay? And ultimately, the chickens were going to come home to roost in mega cap. And if you look at the price action today, Mel, you said the NASDAQ managed to close up. You know what didn't close up? The QQQ, the NASDAQ 100. You know why? 24% of that is Apple and Microsoft, and they both closed down 2%. So they finally killed everything. There's no one left to sell all the garbage, all the ARC garbage and all that other stuff. And that's why we had some of the rallies in some of those names. But it is telling that some of the major generals of this market who've led tremendous amount of the outperformance did close down. So I think there's probably some more downside there. The one thing I'll say is, why am I nibbling on the QQQ? Well, I do think that when we come out of this bear market, we will have a bull run again. It could go for years. And I think the Microsoft, the Apple, the Google, the Amazon, maybe even a Facebook that's been cut in half. Tesla's, I suspect, will be down 70-some% at its lows in sometime in the not too distant future. Those stocks make up 50% of the weight of the QQQ. And then you get dozens of stocks that are down 50, 60, 70%. That can double or go up 200% from the lows. So that's why that's interesting to me. I just think that ultimately you'll see the NASDAQ 100 down about 40% peak to trough. Today at the lows, it was down about 30%. The S&P was down 20% at its lows. Last point I'm going to make here, S&P, and we've been talking about it. The last thing, that analysts and strategists have not capitulated on their 2022 earnings estimates. Yep. They're still calling for 10% growth. Let's say cut that in half, put 208 on that, put the 10-year average per FactSet of the S&P 500 PE at 17, and you get 3,500, which is very near the pre-pandemic high. You put 18 on it, let's say above that, you get to guys 37.50.
Yeah, I want to be clear here. Dan doesn't think that we bottomed, and I know that he said that in different ways just now, but the bottom is not here, but you don't know when the bottom is going to be, Karen. And so I think that a lot of people at home have the same question. When do I start legging into a position in the markets, in whatever it may be, whether it be an indice or an individual stock? Do you think that we're closer to that point now?
Well, we have to be just mathematically closer to that point. Sorry, my dog is barking in the background. So, for me, I'm always long. And so I'm looking to buy things. It depends. If you owned nothing, absolutely, I would get started today. I would do some sort of dollar cost averaging and not worry about timing the market. I'm certain that I'm never going to be able to time the market. So if I own nothing, I would start with Google. You know, it's my favorite stock. It's my biggest position. I think that the risk reward there is very compelling. Same for Meta. And I probably own some, there's some retail I would probably own. Something that's anything in the IGV I probably would not own, because even though it's come down a lot, I still think it's overpriced, certainly relative to the metrics that Dan's talking about. And I think if you don't know what to own, you could buy some spiders, you could buy some Qs like Dan did. I think you're not going to pick the bottom. To think that you're ever going to be able to, it's sort of a fool's errand. Or for me it is. Maybe somebody else can do it.
Most people. Guy, you know, just to get back to Apple, because it's the biggest stock. I mean, Tim had mentioned the 125 level. 122 is its low, and I'm wondering where you think, you know, it goes.
And I was listening to the OT before we came on, and I think somebody from Fundstrat was suggesting, you know, 112 was a possibility. And I don't know, but what I thought the October low of 138-ish was in the cards. We've been saying it for a while. It effectively got there today. So I think to Karen's point, I think Tim and Dan would echo this as well. You know, if you haven't been in this name, if you've been waiting patiently for your entry level, this is about as good as it's gotten for quite some time. Not to suggest we can't overshoot, because we've seen that to the downside many times. But in terms of an entry point, I think the stock gave you something today in that form of 138.80 low.